Hello and welcome to ET Interview. The steel sector literally has been on a tear. Steel prices are at a record high and steel companies are indicating very proudly that it's never been so good for them. So how should one read into the current demand and price surge in the steel sector? Is this just a demand supply mismatch which had got created post the lockdown and which will get normalized, or the strength and the demand is here to stay? Now, just to remind our viewers, steel is a global commodity. So whatever we discuss today has to be looked in context of what is happening in global markets. So to discuss all that and much more, where steel prices are headed, where SAIL is headed, and what we should expect now from the PSU sector, given that the entire Indian PSU sector is going through a massive reboot. It gives me great pleasure to bring on board the chairman of SAIL, Ms. Soma Mondal, to talk about her thoughts on the steel sector and on the company. Ms. Mondal, good morning. This is Nikunj Dalmia from ET Now. It's your first time we're interacting with you on ET Now. So very warm welcome to you and really appreciate. My introduction, I guess, was the first question, which is that it's never been so good for steel companies. Are you personally surprised with the underlying demand and the pricing trend currently which steel companies are reporting?
If you say whether I'm surprised, not exactly surprised, but happy that the situation is like this. You see, we would expect the demand to continue for some time. There are some reasons why the prices are among the highest in the decade. One is there has been a supply side constraint post-COVID, where I'm even in the second and third phase of COVID wave, which has impacted the ramping up of capacities in certain parts of the world. Secondly, China is expected to close down some inefficient units because they have a target of reducing the carbon footprint. Secondly, the demand pickup in auto sector, construction sector, even the white goods sector, and the government policies in various in India, China, and even in the US has put a thrust in the demand also. And thirdly, and most important, is the raw material supply constraints, the prices of iron ore. All these 3 points are majorly driving the steel prices and the demand also.
Do you see enough and more visibility for next 1 or 2 quarters?
The next 1 or 2 quarters appear to remain the same. If you see at higher prices, many viable and closed capacities may open up, thus increasing supplies. Once this happens, the supply constraint would see a little of ease and put some downward pressure on prices. As globally, we are more in control with COVID and the vaccination drive is on, we would see some pickup in the productions also, which have been right now hampered by the COVID situation all around the world.
Now, last couple of years have been tough for SAIL. You've done a massive restructuring and a big reboot on the employee cost front. Given that currently steel prices are at a record high, realizations are at a record high, I would assume that cash flows would increase immensely. How are you looking at capitalizing the strong steel environment and steel prices to improve SAIL's balance sheet?
See, our focus right now has been on reducing our leverage position. We were highly leveraged. In the month of April, we had reached around, borrowings had reached around 52,000 crores. By December, we had been able to reduce that to 45,000 crores. And as of 31st March this year, we are a little over 35,000 crores. So balance sheets, total focus on balance sheet, and coupled with our increased volume, thrust on increasing our efficiencies, reducing cost, techno-economics improvement, we would expect a lot of improvement in our balance sheet and our borrowings, also improvement in our leverage position.
So the current level of about 35,000 crore of debt, is that a comfortable position for SAIL, or the aim is to bring it below 30,000?
See, when we we need to bring it lower because we want to start our next phase of expansion also. We have a desktop study done. We have the land bank with us. So the moment we are able to reduce it by a few more thousand crores, we are planning our next phase of expansion.
Mr. Mondal, why is the conversion cost for SAIL or Steel Authority so high? And I'm using the conversion cost which your peers currently have. And how are you planning to address it?
One of the main reason for higher cost is the wages and salary. And at higher volumes, this would naturally go down. Our techno-economics with the new facilities which have come in are improving every year. So I would expect, we cannot do too much on reducing our wages and the salary bill. But yes, we could reduce our manpower. We are not the amount of superannuation which is happening. We are not recruiting as much. So with a more balanced approach of recruitment and also increasing our volumes, we would reduce our cost of production, our conversion cost.
Where do you see employee cost as total percentage of your cost settling? I mean, in the medium term and in the long term.
Right now, it would be difficult. See, right now our production our cost, it would be difficult to say. We would not be able to reduce too much. Reason is we have our new salary wage negotiations going on. So the amount which we would increase in the wages would have an upward impact. At the same time, since the cost of production, the number of manpower would reduce and the volumes would increase, it would act both ways. It would more or less neutralize.
Okay, so I don't want to get this one wrong. What you're confirming to us is that if steel prices go up by 1,000 rupees per ton, it has potential to move your EBITDA by about 10%.
See, I have not done the calculation, so I would not be able to say right now. But movement of prices by 1,000 would surely impact it's a big impact on our EBITDA. Because it would entirely add to EBITDA.
Okay. Now, Ms. Mondal, it has taken slightly longer than expected, but the expansion plan to take steel capacity from 13 million ton to 21 million ton is done. What is the plan to ramp up the utilization?
See, if you see the annualized crude steel production of the month of March, we have more or less reached our crude steel capacity nearly, not in. So I would say our crude steel capacity we are capable of producing right now. Our planned capacity expansion, whatever we had so far as crude steel goes, we still have to ramp up our mills so that our basket of semis reduces.
If one looks at the realization, Ms. Mondal, realizations for domestic market and realization for the export market, the export realizations currently are very strong and they're better than domestic realization. Would SAIL be thinking on, or would Steel Authority be thinking on lines of exports more?
Our first aim is to meet the demand of the domestic market and also have a strategic presence in the export market. So we would continue to do the same.
How exactly do you think next 3 years for Steel Authority would be different from the last 3 years? Last 3 years was about a commodity cycle which was against you, and it was also about restructuring and putting new processes into play. Next 3 years, how do you see things optically and dramatically changing?
See, in the past, the cycles have been very small. If you see 18-19 was a good year, 19-20 was not. And then 2021, the first 6 months was 3 months or 6 months wasn't great, but then it just picked up post-COVID. So next 3 years, I would expect that the demand would continue, at least for next 2 years or so, the demand would continue in the same way. Production, the major capacities also, if you really see, is not coming up around the world other than in India. So I would expect that the demand and prices would remain strong. And so far as SAIL is concerned, what we need to do is plan out our next phase with a lower leverage position, more comfortable in our borrowings, we would plan out our next phase of expansion. That would be in a very staggered way.
So how much capacity or total capacity SAIL is, or Steel Authority is aiming by 2025?
See, we will not be, right now we have done a desktop study wherein we have planned an expansion of 50 million ton for which the land bank exists in the existing land bank which we have. But it's difficult on my part to say by 2025 where we would be, because what we have done is we have planned out the units, what expansion we have to do in various units. But 2025, it would entirely depend on where our leverages are. We would be able to comment on 2025 exactly where. Initially, when we had done this desktop study, we had planned around, say, around 35 million tons capacity. Right now, we would not be there.
And I would imagine that the capacity expansion would largely be brownfield. It will not be greenfield. You are looking at expanding the current plants and adding capacity there.
Yes, it would be brownfield expansion, but we have a large separate land bank also within the plants.
These are also good times to perhaps monetize some of the non-core businesses. Are there any non-core businesses, non-core land banks which you've identified which you would like to monetize, because government is committed towards the disinvestment process? Is there anything SAIL would like to monetize?
We have worked on that. As of now, we do not have any land bank which we want to monetize. We want to consolidate whatever we have.
You mentioned that you have the necessary land bank and you don't need to acquire more land, which always is a challenge in India. But what about availability of raw materials, especially iron ore? Do you have enough and more iron ore availability to meet your expansion demand?
Chiria mines have been allotted to us. We have still not been able to get it leased in our name. So once we are able to acquire, see, out of the around 3.5 billion tons of iron ore which we have, around little more than 1.5 billion is in Chiria. So once we get Chiria mines, we would be comfortable with our 50 million ton expansion plans.
You mentioned that, look, it will be difficult for you to renegotiate and on the employee front to renegotiate and bring the employee cost down. But since Steel Authority is committed towards increasing productivity, what would be the threshold beyond which the operation, beyond which the capacities and benefits of scale would kick in?
See, what we are into is rationalization of manpower, reskilling, and increasing labor productivity. But at the same time, we are bound by we need to do the salary revision, which we have not done, which was due in 2017. So that is due and we need to do it. So even though we would ultimately increase the per employee cost to the company, but considering that we are able to increase our production levels, we would be able to keep that cost as a percentage of our cost more or less constant. But as and when we go in for a next phase of expansion, we would be able to surely reduce it considerably. And what we are planning is we are planning to work out exactly what job we need to outsource, what are the core activities based on which our employee cost would also reduce. We also have thrust on digitization this now, so that would also reduce our cost. A lot of cost saving measures, and I think in near future we would see its impact.
Are you also aiming at moving up the value chain in terms of specialized steel and in terms of the realization of the steel? Because specialized steel demand and your ability to produce specialized steel definitely will help you aid your margins and expand your profitability.
See, we are producing many specialized steel. Like we work very closely with defense to produce steel for the submarines, for the ships, and also right now we are also producing the steel which is required for the gas pipelines. value addition we have raised. We have wire rod. Last year we have made many higher grade wire rods also from our ISP, from our ISCO steel plant. We have various grade of plates which we are making. So we are into value addition. Yes, we have not gone into value additions like color coating and others that we would be surely looking into in the next phase of expansion.
Now, the major steel plants of Steel Authority are Bhilai, Durgapur, Raulkela, even Bokaro. So, the expansion which you are aiming, will it be spread across geographies or will it be specific to one or two steel plants?
See, when I'm speaking about that desktop study being done to make it a 50 million steel plant, all these, there are land banks available in all these steel plants, and this is based on expansion in all the plants. But we have still not phased out the expansion, like which plant would be first and which would be the next. That we need to do now.
Ms. Mondal, you mentioned that the first aim of Steel Authority would be to reduce debt, reduce the gearing. But is there a thumb rule which you are likely to follow for FY22, that the future cash flows, how much would be used for reducing debt, how much would be reduced to pay out dividend, and how much will be reduced towards capex?
See, first is the cash flow would depend on some internal and some external factors. Internal factors, as I said, taking care of our inventory, reducing cost, increasing volumes. This would give a result in cash flow. But the part which is external to us regarding the market, the demand, that we would not be able to quantify right now. So how much cash flow would be available in this year would be difficult to say. But yes, dividend, we are committed to dividend because stakeholders' requirement is important to us. At the same time, capex, even if we plan out a major capex plan right now, we will not be able to invest too much in this 1 year because it takes time. The whole thing takes time. But we have some capex commitment, and for which we would work out for this year. Which for capex, which we have already planned out, we would be spending this year.
Ms. Mondal, every steel company follows a dual policy, which is that they enter into long-term contracts and they enter into and they also do get revenue from the spot market. Are you likely to follow a differentiated policy given that steel prices are at an all-time high?
We generally, the policies we follow is either we have if we have a fixed pricing, fixed pricing is generally very short term. We do not have very long term fixed prices. We would prefer to get market related price at any point of time. Yes, we do enter contracts for about 3 months, and even for public sectors or government sectors, even for larger duration. For MOUs which we have with customers, we have for the full year, but then the prices are market based on the market for that month. We are not in the process of speculation.
My next follow-up question would be on the fact that government has committed to a large expenditure and a spending program. Given that you will get a huge benefit from the government spending because of being a PSU, how are you likely to benefit because of that? Has SAIL got benefits from nomination from various companies when it comes to spending?
The only place where we have an MOU is with the Indian Railways, where we have a MOU with railways and we supply rails to them. But other than that, every order, most of the orders which we get are through the process of bidding, or we compete with others to book orders. We get equal opportunity as others.
Okay, allow me to ask you a direct question, Ms. Mondal. PSU stocks in last decade have suffered, some because of perception, some because of performance, and some because of the natural course of the business cycle. How will you ensure that your shareholders, whether it's minority or majority shareholders, are rewarded? And what will you do to ensure that SAIL and Steel Authority of India is at par with other private steel companies?
The share prices entirely depends on the shareholders' perception of us, of how we'll perform in future also. So what is important? One is we give value for the money. Second is we have certain amount of growth plans we have, and also we work in the most efficient manner. So we are working in all these fronts, and I'm sure we would keep them happy in future.
In today's disruptive world, how exactly you think SAIL will be able to upgrade their entire technology stock digital process?
We are working towards digitization in our plants. Our technology in the last modernization and expansion plans, the new facilities which we have acquired are the latest. So they have good techno-economic parameters, and the new expansions also would be in the same way. We would take in the best techno-economics, best facilities available, and in the whatever existing facility we have, we are upgrading them to meet the the requirement of the present. And also we are replacing closing down old and inefficient technologies, that also we are doing.
Final question, Ms. Mondal. We started our interview with your outlook on the steel prices. So I'm going to wrap with the same question, or a flavor of the same question, which is that in the short term, where do you think steel prices are headed? And in the medium to long term, where do you think steel prices are headed based on your understanding of demand and supply?
I would expect that in the short term, like in the next quarter or 2 quarters, the prices would remain at similar levels. As I said earlier, if the prices remain at similar levels and we are able to take care of globally, the COVID situation control is better, there would be increase in supplies because of ramping up of existing units, and also maybe some production units would also open up. So there could be some amount of corrections in prices, but I would expect the demand situation to continue. And raw material also, I would expect that iron ore, a little of ease out would happen, at least domestically.
Ms. Mondal, it was a pleasure to have you on ET Now, and we certainly look forward to much more of you on the channel. Really appreciate your time and have a great day ahead.
Thank you so much.